My friend, a key tenet at Small Business CFO is that the purpose of the financial reports that our accounting people make is to help our clients make decisions. They do the reports, they give them to me, I have the conversation with the client. What's next? What decisions can we make next? Well, I was doing an exercise for a client around this, and I wanted the client to be able to tinker around a little bit with his numbers on his own. Well, this means that because of limitations of time and because I don't want it to be too involved, I needed to figure out a way to provide information to him so that he could make summary decisions very, very quickly. And I want to share with you the tool that I did for him. It's very simple. In order for a business to make decisions, what it needs to know are its average monthly income, average monthly payroll, and average monthly expenses. When you have those three pieces of information, averages, income, payroll, and expenses, you can make a lot of decisions without going into details. So let me show you, as an example, what we did. Coming here to this template, you'll notice here that I have the current information. And let's just say, for example, that the business is making $150,000 a month. The personnel costs are running about $90,000 a month on average, and that everything else, and I'm going to include loan payments here. On an accrual basis, they would not be included, but I'm trying to understand cash position at the end of the month. Let's just say that that's $50,000. The business is clearing $10,000 in expenses. Good. All right. Now, here's where we begin to make decisions. I've included a column that shows the changes. So we can do some changes either to top line or existing information here, and we can also add things. So for example, let's say that there's going to be a new position, and that by the time we include the salary and the payroll taxes and the benefits, we figure that it's going to be $72,000 a year or $6,000 a month. And let's just say that there's going to be a marketing initiative. And that the firm that's being considered is going to run about $2,500 a month. Now we see what happens to our net profit once we add these in. And the question is going to be, does the business owner want to make these moves when they're going to be pulling in so little net profit at this point in time? Possibly so. It may be that the new position helps them make another, let's just say $20,000 a month. That could be worth it. So you see how easy it is to work with this kind of a tool. We have our averages. It's on a monthly basis. I love working on a monthly basis because it's a small enough time frame to understand the immediate implications of what's happening. And we have 3 data points: income, personnel, and everything else. Now, some companies have cost of goods sold that are variable according to income. For example, manufacturers may say, listen, we've got 40% of our income goes out the door right away to pay for raw materials and supplies, things like that. Service businesses may be the same way. They say, listen, we use a lot of contractors. We bill hourly. If we charge $100 an hour, we pay 40 out or 50 out, whatever it is. And we have a good month. We have a lot of $100 hours in there, and we pay a lot out. And then some months we have less, so we pay less. So I want to show what that looks like as well. And this is the template for this one. And for the numbers here, let's just say, we'll go with $150,000 again. And let's say that the cost of goods sold amount is going to be 40%. And personnel, in this case, is $50,000. And everything else is $20,000. Then what happens is that we look at the changes. So we have, again, the new position. marketing initiative. And let's say again that we're going to have $20,000 in revenue. We are going to have $6,000 in the new position, and we're going to have $2,500 in the marketing initiative. Now, here's the key for those of you who are in businesses with variable cost of goods sold. Cost of goods sold was 40%. So we need to add into here 40% of $20,000 as an expense. So now we see the implication of what happens when we make these changes. So it's a quick, easy to comprehend tool. You might need a few minutes to think about it to understand how it works. I'm going to put these available to download so that you can actually use them yourself in your own business and start to make some decisions. The caveat around this, as always though, is that your underlying numbers, your profit loss needs to be accurate every month. So make sure that you have an accurate profit loss, that it is set up correctly, you know where numbers are falling in terms of these different categories. If you have any questions, of course, go ahead, reach out to me. I'll be happy to clarify things for you. That's it. I'm Jonathan Agney, the Small Business CFO, and as always, live richly.